Hello and welcome to Business 360. I'm Shireen Pan. The headlines we're tracking for you this evening: more than 130 people dead and nearly 100 injured after a recently renovated suspension bridge collapses in Morbi in Gujarat. Civic authorities in Morbi say the bridge was reopened ahead of schedule by a private contractor without approval or a fitness certificate. Veteran investor Chris Wood says the Indian market has shown phenomenal resilience amidst global turbulence. The Lal Street hits the highest level in nearly 2 months. The Sensex gains nearly 800 points. The Nifty reclaims 18,000. Elon Musk starts to ring in the changes at Twitter. Reports suggest verified Twitter users with a blue tick could be charged $20 per month as Musk plans to ease the reliance on advertising and move to a subscription-based model. There is no confirmation, however, yet. Just a week after retiring as the chairman of the Competition Commission, A.K. Gupta says big tech must allow other companies to flourish, defends a 2,300 crore rupee penalty imposed on Google over its Play Store rules, and asks others to align their policies and allow third-party billing services. That's a CNBC-TV18 exclusive. In a bid to shore up coffers, the tax department is stepping up revenue augmentation measures. Direct and indirect tax officials ask field formations to refocus efforts on collections. Sources say September GST collections are likely to be around 1.5 lakh crore rupees. Insurance regulator IRDAI writes to market regulator SEBI to examine the fair value and any potential wrongdoing in the Axis Bank Max Life transaction. The IRDAI has already imposed a 5 crore penalty on Axis Bank and Max Life for making undue gains and pricing violations. Ahead of a global investment summit, Karnataka's Chief Minister Basavaraj Bommai says his government is competing with Silicon Valley and not with other states in India. Promises to clear investments worth 1.5 lakh crore rupees in a month. Brazil's far-right leader Bolsonaro voted out after a tumultuous 4-year term. Left-wing leader and former President Lula da Silva returns to lead the country after winning by a slender margin. Bolsonaro is officially yet to concede the election. 90-year-old climate activist Greta Thunberg decides to skip the COP27 summit in Egypt next week, calls the global summit a forum for greenwashing, says the space for civil society is extremely limited this year. Let's start with the market action for the day. Bulls managing to regain lost ground for the third day in a row. So the Sensex gained nearly 800 points. It now approaches 61,000. The Nifty gained about 200 points and it has reconquered the 18,000 level. Banks and mid-caps also rose in tandem with the blue chips, so it's been a good start to the week for our markets. The big global event on investors' minds this week is the US Fed meeting. The market is expecting the Fed to raise rates by 75 basis points for the 4th consecutive time. And this comes after data shows inflation in the US remains red hot. And the recent GDP data also showed that the economy continues to hold. Here is veteran market investor Chris Wood with what he expects from the Fed.
They will fudge that 2% target, and that will be the real signal to buy equities. But if they continue to tighten, that is bearish. Unfortunately, the Fed is still flying blind because the Fed still doesn't pay any attention to broad money supply growth, and broad money supply growth has now collapsed. What's been amazing about India this year as a stock market is its phenomenal resilience in the face of a very weak Wall Street.
Well, that's Chris Wood on what the Fed is likely to deliver. Back home, RBI's Monetary Policy Committee is also meeting this week, but no rate hike decision is on the cards. Lata joins us now with more. Lata, so no rate decision on the November 3rd meeting of the RBI. What exactly is this going to be about?
Well, when the Reserve Bank announced that there's going to be a meeting, they gave ample evidence that this is only under Section ZN of the RBI Act. But now we have it from a banking source that they will not discuss anything about rates. This MPC is only meant to draft a report to the government under Section ZN of the RBI Act. Now, what is Section ZN of the RBI Act? It was a section that got added only in 2016 when the MPC was created to set interest rates and keep inflation within the target of 2 to 6%. Now, the section goes on to say if the MPC is unable to keep the inflation within that 2 to 6% band for 3 quarters in a row, that's 9 months, then it will have to, the RBI will have to write a report to the government explaining why it failed, what are the steps they are taking, and by when they will bring it back to target. Now, that is the report. Since the RBI has to write it, they have to discuss it with the MPC, and that's why the meeting is called. The important part for the market is there were still some people believing or worrying that if it's an unscheduled meet, can there be an unscheduled rate action? Our source tells us that it will not be, and therefore we may not even get a one-line press release from the Reserve Bank on November 3rd. That is still a grey area. Maybe there will be a perfunctory release, but the report itself will not be released because the governor told us in the previous press conference that that report is privileged. It is intended to the government only, so we are not going to get anything. The key point, the key takeaway from my sources, there is no rate action.
Absolutely, and this is what we've been reporting. But now, as Lata points out, this is as close to an official confirmation as we can get at this point in time. So no rate action. It is going to be the RBI responding to the Parliament on why it hasn't been able to meet the inflation target. Now, days after taking over Twitter, Elon Musk has started bringing in changes at the social media platform. Now, reports suggest that verified Twitter users with a blue tick could be charged $20 a month. This is in sync with Musk's plans to ease the reliance on advertising and move to a subscription-based model. Silvana Hanaud gets us more on the possible changes that we can expect going forward. Silvana, no confirmation yet on these reports, though.
Busy it has been for Elon Musk because he's denying reports he's planning to lay off Twitter employees prior to November 1st to avoid stock grants due to staffers that day. Now, the New York Times reported over the weekend Musk ordered the cuts across the company, with some teams getting hit harder than others, and that layoffs would take place before November 1st, when employees were scheduled to receive stock grants as part of their compensation package. Elsewhere, Elon Musk says Twitter is revising its user verification process without giving additional details. But according to multiple reports, Twitter is considering charging users for the blue check mark at $4.99 a month, with one report saying the fee could be as high as $19.99 a month. This forcing users to pay up for verification may be coming at just the right time as advertisers begin to rethink their future plans to work with Twitter. Late Friday, General Motors said it's temporarily halting paid advertising on the platform as it, quote, engages with Twitter to understand the direction of the platform under new ownership. And speaking of new directions, Elon Musk is also considering bringing back Vine. That's the viral short video app shut down by Twitter back in 2016 as a possible TikTok competitor. Musk polling followers on the idea and already garnering more than 1.6 million votes.
So proposed changes that Elon Musk intends to bring about. But as we point out, these are reports at this point in time. None of this has been confirmed by Musk or by Twitter. Ashok Kumar Gupta, who recently retired as the CCI chairman, has justified the imposition of penalties worth 2,300 crore rupees on Google for allegedly abusing its dominant market position. In an interview with our colleague Parikshit Luthra, Gupta said that the competition regulator intends to maintain a competitive landscape. He said that big tech companies can take a cue from the Google episode and align their policies accordingly. Take a look.
Job of the Competition Commission of India is to keep the landscape competitive so that innovations can take place and consumers are benefited. Both our orders are opening the ecosystem. We have given behavioral remedies now, and these behavioral remedies are a sort of guidelines for other big tech players. So if they are also indulging in similar behavior, then similar type of remedies can come in those cases also. I think they can get a cue from these behavioral remedies and align their business practices and system accordingly.
That is the former CCI chief. You can catch that conversation with him at 5 p.m. only on CNBC-TV18. At least 130 people have died, dozens injured after a cable bridge collapsed in Gujarat's Morbi, located 240 kilometers away from capital Gandhinagar. Rescue operations are still underway. Over 170 people have been rescued so far. The century-old suspension bridge was reopened just 4 days ago after being closed for 7 months due to repair work. Gujarat's Home Minister Harsh Sanghvi has announced that a criminal case has been registered and a 5-member committee has been formed to probe the incident. Prime Minister Modi is on a 3-day visit to Gujarat. He's expected to visit Morbi tomorrow. A CCTV camera also captured the moment when the bridge collapsed. The visuals are disturbing. We advise our viewers to use your discretion. The Morbi civic body told us that Oreva Group, which was awarded the contract to maintain and manage the bridge, did not inform them before reopening. The chief municipal officer told us that no fitness certificate was issued either. Siddhant Mishra gets us the latest from Morbi.
You know, while I was boarding this boat, I saw people taking one more body with them, and that body was kept in the ambulance. So we can expect toll to increase. In fact, the state government also has to say that the toll can increase, but the target is to end the rescue operations by the end of the evening. And reason is because almost most of the patch here has been cleared. The epicenter is this, the where we are passing by. This one spot is the epicenter. Now this one spot has also been cleared underwaters because the debris was removed by with the help of the crane. You can see that crane right there, and then divers went inside the water to check whether anybody is stuck, dead or alive. This bridge connects Morbi 1 to Morbi 2, and it was a very significant bridge because it's almost 100 years old bridge, was being maintained by a private player. Now that private player only developed, renovated this bridge, and this bridge was opened for the normal public. But yesterday, more than 150 people were there on the bridge as per the locals, and then bridge got collapsed. So that, going by the eyewitness account, that was one of the reasons that why bridge got collapsed. Also, FIR has been lodged, SIT teams have been formed by the government to know the exact reason for the collapse of the bridge.
हादसे में जिन लोगों को अपना जीवन गंवाना पड़ा है, मैं उनके परिवारों के प्रति अपनी संवेदना व्यक्त करता हूं। दुख की इस घड़ी में सरकार हर तरह से पीड़ित परिवारों के साथ है। गुजरात सरकार पूरी शक्ति से कल शाम से ही राहत और बचाव कार्यों में जुटी हुई है।
ये जो ब्रिज दुरुस्त करने के 5 दिन जो पहले उद्घाटन हुआ और 5-6 दिन में ही कोलैप्स हुआ, ये क्या कारण है और इतने लोगों को छोड़ने की कोशिश किसने की, इसका सारा एक इंक्वायरी होना चाहिए।
Terrible tragedy there in Morbi. Time for us to head to a short break, but up next, California-based firm Celesta Capital bets big on Indian startups. We speak with the co-founder Nicholas Braithwaite and managing partner Arun Kumar when we return after this short break. Well, we are in the midst of earnings season, and the big ones today. BHARTI Airtel, it has beaten street estimates, posting a net profit of over 2,900 crore rupees in the second quarter versus expectations of 2,400 crore rupees. Average revenue per user has also come in higher. It's come in at 190 rupees. That's up from 183 in the previous quarter. So it's a beat there for BHARTI Airtel in Q2. Now, the rise of promising startups and tech companies in India has offered a lucrative opportunity for the world's top venture capital firms. The Prime Minister's repeated assurances of promoting startups is also giving confidence and hope to global investment, to the investment community to place their bets on Indian companies. One such firm is Celesta Capital, based in the US. Celesta is a multi-stage deep tech venture capital firm having 95 companies in its portfolio, with 11 of them being valued at over $1 billion, 4 companies valued at over $500 million. The firm has 4 funds totaling over $1 billion. Its India portfolio includes companies like Arzdu, Clairvolex, Connect, Heal, Healofy, IdeaForge, Quest, Pixis, Rizzle, and more. The company recently invested in the Indian medical diagnostic platform 5C Network at a $4.6 million Series A funding round. So what is Celesta's India strategy? Which sectors and companies is it looking to invest in? To talk about this and more, I'm joined by Arun Kumar, Managing Partner, and Nicholas Braithwaite, Founding Partner at Celesta Capital. Gentlemen, appreciate you joining us here on the program. Mr. Kumar, it's great to have you back on the show in a different avatar this time around. So let me start by asking you about Celesta Capital as well as the current context as far as the Indian startup ecosystem is concerned. It is a difficult period. It's a challenging period, given the fact that the easy money that this ecosystem has gotten used to has dried up for now. But what's the sense that you get on how quickly you believe we will ride out this volatility?
So I think, Shireen, for the kinds of investments that we make, which really are like a Series A, early stage to mid stage, things have not changed. The opportunities are very much there. We are very excited with the entrepreneurs we are meeting. The market, we are looking at a long-term market, so it's going to be strong, both in India as well as the US and the global markets that we are looking for. So in venture capital, our horizon is longer than the current short-term situation. So when you look at it that way, this is a good time to be starting a company. Yes, there will be some pressure on valuations, which have gotten arguably out of hand. But for successful enterprises with strong value propositions, this is actually a very good time to get started. And we've seen that. And we've seen that in previous such cycles, these have been the kinds of times when high-quality companies were born. So we are very excited to be here. We're excited with what we are seeing.
Yes.
And Nick?
Nicholas, let me take that forward with you. As Mr. Kumar was pointing out, the silver lining through this difficult period has been that Series A early stage funding continues to move higher. What do you find different in the quality of entrepreneurs, in the quality of businesses and business models in India today versus what you are seeing globally? You've got a large portfolio, global portfolio. And more importantly, how much are you going to be deploying in India? What's the war chest that you're working with?
Well, in terms of the types of companies we've seen in India, things haven't changed that much. But the opportunities in India are tremendous, though. The quality of the companies we've seen, the quality of the entrepreneurs we've seen are very good. One of the very first companies we invested in when we started the fund almost 10 years ago was in semiconductor company. And it was our first exit, and it was a very good exit. And so we've been investing here from the time we started the fund. We always had a focus on investing in India, and we're starting to see a lot more opportunities than we saw then. I think what's happened is all of us have probably slowed down the pace at which we're investing, but it's not because we're not seeing great opportunities. It's because of the current global economic situation.
Yes, speaking of the pace having slowed down, and that reflects the global mood at this point in time, which is risk off or risk averse. But Mr. Kumar, you said that you're excited by what you see. You've invested in a whole bunch of companies, of course, largely deep tech. What excites you most about the investments that you've already made, and more importantly, what's lined up in terms of future investments?
So I would say what excites us is the opportunity for deep technology, and that means hardware, software, semiconductors, systems, where there is some fairly complicated technology involved to solve important problems. The talent exists in India. We do not see India as a cost arbitrage play. We see it as a very strong talent play. So that's very exciting. Then applying technology for transformation in areas like agriculture, healthcare, education, retail, and we have made investments in all these areas, is also very exciting because we see a tremendous absorption of technology in these sectors once we have the right technology available to them and delivered in the right way. What's ahead? I think all these companies that can benefit from very seasoned guidance, and what Celesta brings is people with a tremendous amount of experience, operating experience, leadership experience. So young entrepreneurs in India can gain the benefit of the experience of people like Nick, of my experience, of Michael Marks, of Sriram Vishwanathan, other partners, of Sudhir Rao, and of many other partners that we have who have real-world experience, which can really help make a very big difference. And we've seen that in the companies we worked with, that entrepreneurs who are very bright technically can benefit greatly with operating experience. So we see an opportunity for applying operating experience to build and scale world-class companies from India. That's what we see, and we're excited about that.
Okay. Nick, speaking of that excitement, I want to understand from you, you spoke about the one big exit that you've already seen here in India, and of course you've had a decade-long journey here. In terms of the size, the ticket sizes, the check values, how has that changed over the last 10 years, and what can we expect now in terms of the average check size from you for your potential portfolio companies, and any likely exits on the anvil, or has that been pushed back because of the current environment?
Well, let me start with the last part of the question. We do have a likely exit. We have a company here that we invested in several years ago, and that is going to be public probably early next year, and we're excited about that. In terms of check sizes, that has not changed significantly. We probably have increased the initial check size that we do in India slightly, but not significantly. But the total investment that we're making in companies in India, that has increased. If you look at 7 to 10 years ago, the size of the investments we were making, I would say they were probably about half of the total amount we're investing in companies today.
Okay, so the average ticket size remains more or less the same, but the value of or the quantum of investments in India has gone up significantly over the last 10 years. Mr. Kumar, we just had the Karnataka Chief Minister speaking to us. Of course, the Karnataka Investment Summit is on, and like every state government, the government of Karnataka trying to woo investors, saying that we're not in competition with other Indian states, we're in competition with Silicon Valley. I don't know what you make of that comparison.
No, actually, I think it's a collaborative relationship. There are tremendous synergies between Silicon Valley and Bangalore, where both, Nick and I live in Silicon Valley and we're here in Bangalore. And the potential for synergies is tremendous. So I don't really personally see it as competition. There could be healthy competition. Let's create more successful companies out of Bangalore and increase the pace of that. So that's great. But otherwise, there's going to be a lot of collaboration between the two. And I think, and you also mentioned Prime Minister Modi. He has been pushing the idea of Make in India. And what we are seeing in the companies we're investing in is almost beyond Make in India. Design in India, build in India, scale from India. So overall, we see working between Silicon Valley and India to be one with tremendous potential.
Just to take that forward, Nick, and I'll give you the final say, speaking about this collaboration as well as the global aspirations of Indian startups, including some of your own portfolio companies, where are things currently? If you were to just assess what's happening within your own portfolio, how real, how significant are these global aspirations? How long before we can actually see a significant difference being made by these Indian startups on the global scale?
I think the potential is real. If you look at the companies that we've invested in, we believe that all of them have the potential to be global businesses. And you have to think that way when you invest in technology. Technology is a global business. Your competition can come from anywhere. So the companies in which we're investing, we believe have the potential to be able to scale globally. The first one I mentioned that we had to exit, one of our first customers came out of the US, but then the second customer came out of China. And we've recently had two of our companies here that have started branches in the US, one just recently and one some time ago, because we are starting to see great traction in the US for some of these companies. So I think it's real. The companies we are developing, as Arun says, there's real talent here, and we are developing products that it could be competitive globally.
Well, that is good to hear, and we wish you and the team at Celesta the very best of luck. Thanks so much for joining us to talk to us about the India strategy and your future plans here for the Indian startup ecosystem. Arun Kumar, Nicholas Braithwaite, always a pleasure. Many thanks for joining us here on Business 360. With that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned to CNBC-TV18. The news will continue on the other side.
Co-powered by Van